What's up, guys? Welcome back to my weekly update on Stockmore's YouTube portfolio options play. So what we have in here is Stockmore's portfolio. Right now he has around 6 stocks in his portfolio. I have managed up to 4, and let's take a look at it. I have managed to add one more this week. Let's take a look at it. This one is going to be a little longer video than normal because we'll go into some details with some of the trades in here. Let's start off with the new one in here. I started off this week buying plug for 65 call expiring Jan of 2022. So this is on the leap side for 1580. Currently this is the position, and I sold a covered call with expiring March 19th and receiving a premium of 340. So that's the position that I have entered this week. Next, let's take a look at a couple of existing positions that I closed and re-entered. So GNOG 25C that expired on the 19th, on Friday last week. So I closed it for 0.08 cents. So a total of $94 profit on that one. So this becomes closed. And I opened the March 22.5 strike for 81 cents. So this is the current position on that one. And TTCF, so I'm closed the 30C on February 19th for 10 cents. And open this position getting a premium of 140 for the same strike price expiring March 9th. So that is currently open. So these two there. Let's take a look at NEO, and let's look at NEO in detail. For the past 4 weeks this is in play, and let's see how it actually stacks up with the profit and loss in here. So you can see the longer side, it's now going negative because there is loss of momentum on the stock price. So it's right now the 50C expiring Jan 2022 is 1990, and it's under my purchase price. However, the last week expiry 67, I bought it back for 50 cents, and I'm sorry, this is not 50 cents, this is 5 cents. So 5 cents, and this is the one that is closed. And I immediately opened 64 strike expiring next week for 83 cents premium. Let's open in here. Let's look closely on the NEO stock in here and look at all the open and closed positions. So from the beginning we had around 5 short side cells. So this one expiring Jan 29, Feb 5, Feb 12, Feb 19th, and this is the latest position that I have. So as you can see, 1, 2, 3, 4. So all this sold, and I kind of received premiums for it, and I bought it back at a very low price. I like to buy it back before it expires that Friday. Even though I can just leave it to expire worthless, I don't want to give it a chance should something happen after hours and the price jumps back out. So I have bought it back at these prices. This is the profits that I received on each one of them. Had I just had this one position, after 5 weeks or 4 weeks holding, it's now negative 39, right? So that's the current position. I could just go ahead and hold this one for the entire year. That's right. That's the intent. But if you had stocks, you would have done the same. But in this case, I'm selling selling a call weekly and receiving these premiums. So because I received these premiums, so far it's 326. These are locked, and that's why I can see that the overall profit on the new position that I'm holding in here is still positive 337, even though the main leap has gone down in here. and that is why I kind of go with this leap approach by way out expiry and hold it, and I kind of reap a weekly or a monthly premium based out of it. Use that as collateral and sell these premiums in here. So that's the idea. So the next one expires next week. Let's see how this one goes in there. Alright, so that's the positions there. Last one, let's take a look at CCIV. So last week we looked at 45C strike, which expired 319, and I had sold it for a premium of 695, and I had to buy back because CCIV, the price kind of ripped, and I had to buy back at 1321, and the word in the streets are it might reach $80. So I looked at 80 strike and a premium that I should receive more than what I paid for closing this or position in here. So this one is closed in here, so that is a negative 626, but I went and sold an 80 strike expiring July, and I received a premium of 1671. Net I think I'm on positive on this one if it doesn't cross 80 strike by July. So I received 1671. Currently it is at 1505, so 166 in profit in here, and that's how I roll. Basically, if the strike price, if the price of the stock moves beyond the strike price of the sold call, in this case 45C, then I buy it back immediately and sell one which gives me a better premium or equal premium to the price that I bought back, and I wait for it to kind of reduce the price and get it go worthless or expire worthless on this one. So right now I am 166 profit on this one. On the long side, of course, it has ripped higher, so I am a total profit of 1144 on that one. I'm going to hold it in there. Let's take a look at CCIV itself in here. So this one gets closed, so that one, even with this 626 loss in here, that gives me a total profit of 685. And slowly, if this price doesn't reach 80, if the stock price doesn't reach 80 by July, I may get the entire of 1671 as well on this one. So holding on that. So weekly PNL right now, the running PNL is 10%. So I'm still positive for the week, +1. And just to compare with stock most positions in here, so Neo still on the positive side because I've been selling the calls. Gino and Tattooed Chef are on the negative side. CCIV, of course, it ripped, so it is 685 on the positive side. Plug new entry, it's $2 on the positive side. So this is how it looks. Thanks for watching.